Hello investors and future investors, welcome to the channel. In today's video I will show you my trade of the week, and I'll also give you a bonus stock that can be used to generate weekly income. So if you're new to the channel, thanks for stopping by. On this channel we help you with option strategies that can give you consistent revenue and everything related to finance and investments. And yes, you too can make money from your living room with options trading, and I'll show you how. And all I ask in return for this free content is an early thumbs up by you hitting the like button. And while you're down there, consider subscribing for more ways to win with options. Welcome to Investment Gains. Let's jump right into it. So for today's trade of the week, we're going to focus on the covered call strategy. For today's video, we're going to be using MicroVision, ticker MVIS. Now let's get right into it. We're going to go over to trade MVIS options in order for us to open up the options chain. Now that we have the options chain open, what we're going to do, we're going to make sure it says sell and call because we're doing covered calls. Now we're going to choose our strike date and we're going to go just 1 week out, which is going to give us October 15th. Now, in order to make this strategy the most effective, it's advisable that you choose your strike price a bit above your share price. Now, if you're not new to the channel, you would know that I usually like to choose my options with a 75% chance or higher of profitability. Now, with that 75% chance of profitability, that should give us the $12 call. The $12 call gives us a 78% chance of profitability. We're going to click into it. We're going to hit continue. We're going to choose the amount of contract we want, which is 1. And there you have it. So right away, once I do this strategy, I will be receiving $35 minimum credit into my buying power. Now, that $35 minimum credit is mine to keep no matter how this trade goes. That's the beautiful part about this strategy. So how do we get involved in a covered call? In order for us to do a covered call, we must first own 100 shares or more of the underlying stock. So that being said, in order for me to do a covered call on MVIS, I must first own 100 shares. Now, your rate of return or your return on investment, your ROI, is going to depend on the cost. Now, let's say you purchase your 100 shares of MVIS at 10.5, but now you're selling at $12. So not only are you going to make $35 minimum credit, if you are assigned the shares, which I'm going to get into in just a second, you will make additional income, which is going to be the difference between 12 and 10.5. And as you know, each option contract is multiplied by 100. So we then multiply that by 100, and that should give us an additional $150. So as you can see, by doing this covered call, we could make upwards of $185. Now, let's take it back one bit. In order for you to win this trade, on the expiration date of October 15, you would ideally want MVIS to be trading at $12 or below. Now, if that happens, then you keep your minimum credit and you get your 100 shares released back to you in order for you to do another covered call for the following week or the following month. It all depends on which date you choose. Now, the other way this trade is going to go, once again, if on October 15th, MVIS is trading at $12 and above, well then now you're forced to sell your 100 shares at $12, but it is no big loss. So once again, if that happens, you keep your $35 minimum credit, but now you're going to get an additional $150. Now, just in case you don't know where the $150 came from, let me run it by you one more time. So initially, you did buy 100 shares at 10.5. Now you're assigned the shares, meaning you have to sell 100 shares, but now you're selling it at $12. The difference between your $12 and your $10.50 is going to give you $1.50. The $1.50 multiplied by 100 shares, $150. Whoop, there it is. That's why this is my trade of the week. Now, as promised, I will give you a bonus stock. Now that bonus stock is going to be SPY, ticker SPY. Now I know what you're saying. First of all, you're saying no one can afford to sell covered calls on SPY. But let me tell you, whoa. I'm not going to give you a strategy that you're not able to afford. So just hear me out. Let's go to trade SPY options in order for us to open up the SPY chain once again. Now we have the SPY chain open. It's going to be the exact same strategy. So I'm going to first show you how to do a covered call, and I'm going to show you how to get 100 shares for cheaper. So once again, we're going to go to sell and call, and we're going to choose the strike date. This time, let's do it a bit closer. Let's go to October 8th. Again, we're going to choose our strike price above the current share price, and we're going to look for a 75% chance or higher. With the 75% chance of higher, that's going to give us the 437.5 call. As you can see, 75% chance, and that's going to pay us $1.50 or $150. Let's click into it. We're going to hit continue. There you have it. So if you're selling one covered call on a SPY option expiring October 8th, you will be receiving $150 minimum credit, and that's yours to keep no matter how this trade goes. Now, I previously did explain to you how you win this trade and how you lose this trade. So let me answer your question. How can I, with a small account, afford to sell SPY covered calls? That's rather simple. So let's go back into the SPY. Now we're going to go back into the options chain. Now, if you're not able to afford 100 shares of SPY, which even I can't afford, however, I use one option strategy known as a leaps option. With a leaps option, it allows you to buy 100 shares at a much cheaper price, and it simulates you owning an actual 100 shares. And then Robinhood now allows you to sell covered call against this. Let me just give you a quick example. So for this instance, we're going to go to buy and call, and now we're going to choose our expiration date way out. Let's go to March 18th, 2022. Now, I do have several videos on this and what criteria I use in order for me to purchase my options whenever I'm trying to buy leaps. So I'm going to attach the video above in order for you to review that. So just for argument's sake, you could go ahead now and choose any one of these calls here based on your risk tolerance, and then add it to your portfolio. Right away, once you add it to your portfolio, 2 minutes after, 10 years after, you could go ahead and sell covered calls. Now, the reason why this is a better strategy if you trade with a small account is the amazing price at which you get it at. If you were to buy this one right here, now, once again, this is just an example. If you were to buy this one here at 433, you would be paying $2,250. However, if you were to try to buy 100 shares of SPY right now, it's going to cost you around $43,000. Now, that is a big difference. So there you have it, the trade of the week, covered calls using MVIS. Your bonus is going to be the SPY, and I did show you how to get into a SPY leaps option and then use that in order to sell covered calls. That overall strategy is known as the PMCC, and I will link a video to the top. Now, we have lots of strategies like this on this channel. So if you want to join the weekly income team, like and subscribe right now. Also, hit the notification bell to get an alert whenever I post a video. But most importantly, share this video with someone you think that can benefit from its content. Let's help as many as we can. Thanks for watching, and remember, always keep pushing your investments.